Who will notify the rate of tax to be levied under CGST? So, first option is central government suo motu, state government suo motu, GST council suo motu, central government as per the recommendation of the GST council. So, suo motu decisions are not entertained as far as rate of tax is to be concerned. So, even though the central government has an upper say with regard to rate of tax, even central government is not acting suo motu. This has to be kept in mind. So, central government is acting as per the recommendation of the GST council. So, first what happens is the GST council recommends. So, on hearing the recommendation, the central government notifies the rate of tax. So, suo motu decisions are not taken, therefore A, B, C are ruled out. But the central government is only notifying the rate of tax, but as per the recommendation of the GST council. Even GST council cannot take any suo motu decisions, and state government, of course, it is not at all the correct answer because they just abide by the rules of the central government and GST council only. So, answer is D, central government as per the recommendation of the GST council. Next, so, which of the following taxes will be levied on imports? So, imports are considered as interstate transaction. So, with regard to interstate transaction, IGST is levied. So, import of goods or import of services, in both the cases also IGST is being levied. So, CGST and SGST only in intrastate transaction, and with regard to imports, A and B is ruled out. D exempt, wrong. In case of import of goods or import of services, exemption is not given. Therefore, answer is C, that is IGST. Next, with regard to composition levy, let us keep in mind the composition is undergoing lot of changes. So, we can give the latest change only. So, the in future also the composition by itself may undergo lot of changes. So, depending upon the changes, please keep yourself updated. Now, can a registered person under composition scheme claim input tax credit? So, with regard to composition levy, the person cannot even claim input tax credit. That is for sure. So, what is that? He cannot even, there is no S option, it is only no. Whatever may be the purchases or whatever may be the outward supplies, the person cannot even claim any input tax credit. So, the answer is a clear no. So, the answer S is wrong, the answer is no. So, C and D options, input credit on inward supply of goods only can be claimed, or inward credit on inward supply of services only can be claimed. C and D are also wrong. So, it is a clear no. So, answer is no. Next, can a person who is registered under composition scheme collect tax on his outward supplies? No. That is also clear no. So, this is the beauty of the composition scheme. He cannot claim input tax credit, he cannot collect taxes also. So, the person, this is composition is only for the benefit of small scale traders, and thereby it is only for quarterly basis returns are being filed, and they are denied some benefits like claiming input tax credit and collecting taxes on the outward supply. So, the answer is a clear no. Yes, if the amount of tax is prominently indicated on the invoice issued by him, false. So, with case of composition person, they cannot issue a tax invoice, and he cannot collect taxes on the outward supplies. Therefore, the answer C is wrong. Yes, only on such goods as may be notified by the central government, that is also wrong. So, as of now, he cannot collect tax, that is a clear no. B is the answer. Now, which of the following will be excluded from the computation of aggregate turnover? So, aggregate turnover, it literally covers all the outward supplies. So, with regard to all the outward supplies, it covers. For example, export is being covered, taxable supply is being covered, exempt outward supply is covered. So, value of taxable supply, value of exempt supply, and non-taxable supplies, all these are being covered under the meaning of aggregate turnover, but inward supplies on which tax is paid on reverse charge basis is being excluded from the computation of aggregate turnover. So, the answer is D. Now, what will happen if the turnover of a registered person opting to pay taxes under composition scheme during the year crosses 1 crore? So, recently the threshold limit has been increased from 75 lakhs to 1 crore. That has to be kept in mind. So what happens is that the moment he crosses the threshold limit, he automatically becomes a normal taxpayer. This is the beauty of composition scheme. The composition scheme is applicable as long as the person is within the threshold limit. The moment it is crossing the threshold limit, automatically the person becomes a normal taxpayer. He can continue under composition scheme till the end of the financial year. Wrong. The moment he is crossing it, he becomes liable. He will be liable to pay tax at normal rates on the entire turnover. Wrong. As far as the one where he is enrolled as a composition taxpayer, he is eligible for composition benefits. But the moment he is crossing the threshold limit, he becomes a normal taxpayer. So two different schemes will be there. One is a composition scheme, and the next will be the normal scheme. So for part of the year, he will be composition under composition scheme for the limited threshold, and once it is being crossed, he will become a normal payer. So B is also ruled out. Now he will cease to remain under the composition scheme with immediate effect. That's the correct answer. Next, he will cease to remain under composition scheme from the quarter following the quarter in which the aggregate turnover exceeds 1 crore. No, that is not the right answer. It is only immediate effect. There is no waiting at all. So the answer is C only. Now, the value of supply of goods and services shall be transaction value, MRP, market value, none of the above. So, MRP is maximum retail price? No, not at all correct answer. Market value? No. So, it is always a transaction value which is called the taxable value, and the value of supply of goods and services shall be transaction value only. The answer is A. Now, the value of supply should include. So, what does it include? So, valuation rules are being given, and according to the valuation rules, certain inclusions are there and certain exclusions are there. Any non-GST taxes, let us keep in mind, non-GST taxes will be included in the value of supply. Non-GST taxes like property tax, or if there is any mandi tax, or if there is any taxes which is paid, royalty fee paid to the government, all these are non-GST taxes. So those will be included in the value of supply. Duties, cesses, fees charged by the supplier separately, all this will be included in the value of supply. But whether GST taxes will be included? No. CGST, SGST, IGST, all these things will not be included in the value of supply. So non-GST taxes will be included in the value of supply, but GST taxes will be excluded. So non-GST taxes like mandi tax will be included in the value of supply, whereas GST taxes like CGST, SGST, etc. will be excluded from the value of supply. Next, interest, late fee or penalty for delayed payment of any consideration for supply. So, if the payment is not paid within the due date, then the supplier may ask for interest, or he may claim any penalty, he may charge any late fee. All this will be included. Next, subsidies directly linked to the price except subsidies provided by the central and state government. If the subsidies are provided by third parties, then it will be included in the value of supply. If the subsidy is provided by central and state government, it will be excluded. One more condition is subsidies must be directly linked to the price. So, subsidies directly linked to the price provided by the third party will be included in the value of supply. And D, all of the above. So, we know that all these three are included in the value of supply. So, answer is D. Next, whether definition of inputs include capital goods? No, because capital goods has been specifically explained. So, capital goods has been specifically defined, and therefore inputs does not include capital goods. Therefore, the answer is a clear no. So, answer is A. Next,